What's up, traders? Welcome to today's live synthetic trading section. Okay, so today we are going to be breaking down the synthetic market step by step, analyzing each of the volatility index and the step index. So today, if you have any question, don't forget to drop your comments in the comment section. And if this is your first time of watching, don't forget to like, subscribe, and join the Telegram community because that is where I follow up with every setup I post every day. And if this is your first time, you can copy the link, share it on your status, share it on every social media platform you can, so that other persons who are interested in learning more about synthetic markets can join. So today we are going to dive right inside the markets and see what the market has for us. Okay. So I'm going to be sharing my screen with you right now, analyzing all the 14 pairs we're currently trading on our watch list. And let's see how it goes. So today we have the first pair on our list, which is we're going to be taking about 14 pairs. We're going to be analyzing about 14 pairs today. And the first pair on our list is, let's check it out. We have V75 1S on the first pair on our list. And like I always said, before you do your analysis, start from what they call the top-down analysis. The top-down analysis is very, very important when it comes to trading synthetic indices because that is where you get most of your clarity from. You don't just start, you don't just carry your phone, laptop, and then you start looking for patterns to trade. Okay. If you don't know where the price of a particular pair is coming from and where it's going to, you will not actually know, okay, this is what you're supposed to do at a particular point. Okay. You might be selling when a trend is bullish, and then you might be selling when a trend is bullish, and you might be buying when a trend is bearish, all because you didn't do your top-down analysis or down-top analysis, whichever which one you like to start with first. So today we have V75 1S, and like I always say, we trade the advanced market structure. And if you are new to this channel, if you go to the playlist, I've already explain all the topic of the system of the model I use. So you can just help yourself with it. We have the advanced trading structure, we have the point of interest, confirmation entry, top-down analysis. All of these things has been explained. And all you have to do is just go through the channel and then you'll see every of those things to use. Just use it to help yourself. So starting from V75 1S, like I always do this. This is the pattern, this is the trading model we use. Okay. First of all, we have something like this. We have a liquidity here, okay? This is a liquidity, okay? And then we have this, the price will retrace to sweep this liquidity. Okay, once price sweep this liquidity, it gives us our protected high, which is this, okay? And then price will break this newly created low to give us our first break of structure. And once price does that, the price will retrace 50% to give us our structural liquidity, which will be used as continuation, and then price will retrace back to break this structure, giving us our second break of structure. Now we have an A plus setup. Okay, we have an A plus setup. And what does price do next? Price will retrace back to take out this newly created high, which is the structural liquidity, because this structural liquidity is used as continuation. So when price take it out, price will now move to the opposite direction. Okay, so that is the first rule, 5 rules of the advanced market structure. Rule number one, we have our sweep of liquidity. Rule number two, we have price returning back to break the sweep, giving us our first break of structure. Rule number three, we have price giving us our protected high. Rule number four, we have price, rule number three, we have price giving us retracing back to, let me start all over. The 5 rules of the advanced market structure, we have rule number one, we have price sweeping a liquidity, which gives us our transactional liquidity. Rule number two, we have price returning back to break the newly created low to give us our first break of structure. Okay, rule number three, we have price retracing back into this. Rule number three, we have price retracing back 50% to give us our structural liquidity to be taken out later. Rule number four, we have price retracing back to break this newly created low, which give us our second break of structure. And rule number five is price taking out this newly created high, which is our structural liquidity that is used for continuation. And then price and rule number five is price returning back, which is after rule number five, after price has taken out this, it's uh, move to the opposite direction. So this is what we have now. First of all, we have our sweep of liquidity. We have our protected high. We have first break of structure. We have structural liquidity here. And then we have our second break of structure. Now this zone now becomes our point of interest, POI, of which price coming to and then move to the opposite direction. You can see this. So this is what we have. All right, this is what we have. So this is what we look at for every day on this market. The same thing you have for sell, the same thing you look at for when you want to buy. So it's as simple as this. So all you have to do is just for you to study this pattern, and then whenever you spot it in the market, you take your trade. But the most important thing that we take note of is uh the top down analysis, where price is coming from and where it's going to. Okay, so starting on our list today, the first one we are looking for, we have B75 finance. Now, for us to take B75 finance, we have to start our top-down analysis. Okay, how to start our top-down analysis, which is this. Let's start from the daily time frame. On the weekly time frame, the trend is bearish, and on the daily time frame, we still have a bearish continuation, which is this. First of all, we have our super of liquidity, which is here. Remember, the same pattern I just drew for you guys is the same thing I'm going to look out for on all the pairs. Higher time frame, then scale it to the lower time frame to look for my continuation. Understood? So we have sweep of liquidity, and then we have our first break of structure, which is this. We have our protected high. We have our structural liquidity, which is this. Then we have our second break of structure, which is this. And then this right here becomes our POI. So as you can see, immediately price tap into this POI, it start moving to the opposite direction, which is our rule number 5. So here you go. This is the daily time frame, and this is the target. Okay, so price is definitely going to come and take out these targets. Okay, depending on the confirmation you have in POI, your entry might be tight. Okay, so that you have more risk to reward. But whichever way it is, you can still go with it, right? So if you don't understand confirmation entry, I already make a video on that. You can just check the video on my playlist to understand study confirmation entry, and definitely it's going to actually help you. So now when we see a continuation where price is going to on the daily time frame, what do we do next? We scale down to the 4-hour time frame to check for where is we scale down to the 4-hour time frame and look if there's a continuation on the 4-hour time frame or the 15 minutes time frame. So when we see a continuation on the 4-hour time frame, then we'll wait for it to come to that zone on the 4-hour, then we can take a trade. Okay, so currently we have a continuation here, which is on the 4-hour time frame structure. We have the sweep here. We have our first break of structure, which is this, and then we have our structural liquidity, which retraces 50% to give us a structural liquidity, and then we have our protected high, which is here. Okay, and after the protected high, we have our second break of structure, which is here, and then this is what we are anticipating next. So when price return back into this zone, into this H4 or H1 time frame, once it retreats back into this zone like this, all right, then we'll start look for our 1 hour continuation. Okay, we start looking for 15-minute continuation, which is it's going to be something like this. We start looking for this pattern like this. Start looking for a pattern like this on the 15 minutes time frame. Start look for pattern like this on the 15 minutes time frame. So that's just basically it. On the 24-hour time frame, that's where we find our structure, where prices. 24-hour time frame, weekly time frame. 24-hour time frame and weekly time frame, those time frame they give us direction. Okay, they're just like that is what we use as our directional bias. And then the 4 hour time frame, that is what we use as our structure. Then after we know that okay, we have a structure on the 4 hour time frame, on the 1 hour time frame, then the 15 minutes time frame we look out for our continuation setup. That is where we take most of our trade. That's the time frame we take most of our trade. So for a beginner that I don't have a lot of capital and all of those things, the reason why I don't take trade on the higher time frame is because of capital. And then you won't want to take trade on the 4 hour time frame and be holding trade for days, for weeks, because you are not a swing trader. I'm a day trader and I only show you exactly what I do on this channel. Okay. So currently, there is no setup on the V75 1S, and the next we are going to move on to the next pair, which is V90S. Okay, we're going to move on to the next pair, which is V90S. Like I always said, once you come to the higher time frame, you always look for your continuations, for your direction on the higher time frame, which is the daily, the weekly. Okay, but if you go to on the V91S, the weekly time frame is on a bearish trend, and on the daily time frame, you can easily spot a continuation here, which is one, we have a sweep right here. We have our protected high on a daily time frame here, which is this. We have price retrace 50% to give us our structural liquidity. Now, this becomes our first sweep, our first break of structure, and this becomes our second break of structure, which is right here. And then we have our point of interest, which is here. And then as you can see, price tap into the point of interest, which is the POI, and then it starts moving to the opposite direction, which is this. You can see that price has started moving to the opposite direction. Now this 24-hour structure now give us a direction. Okay, the direction now is, look at where price is moving from, and this is the direction. Okay, now we are going to be following the direction of where the price is going to. So what do we do next? We have gotten the direction on the daily time frame, that where this is where price is going to. Now we are going to scale down to the 4 hour time frame to look out for our structure. Okay, to look out for the same pattern we look out for on the 24-hour time frame. Remember, the 24-hour time frame, the weekly time frame, is just there for us as direction, because we can't take trade on those time frame. Now if you look closely, we have a sweep here on the 4 hour time frame. Then we have our first break of structure here on the 4-hour time frame. We have our protected high here on the 4-hour time frame. We have price retrace 50% to give us our structural liquidity on this same 4-hour time frame, and then we have our second break of structure. Now this is an A plus setup. Okay, now after that, what do we see next? This point is our point of interest. Price will take out the structural liquidity and continue to the opposite direction. Now that price has continued to the opposite direction, this is going to be our target. This is going to be our target. Our target is here. So what is expected of price to do now? Price is going to come back all the way. Price is going to come down all the way to this point. So now that we've gotten our 4-hour, we've gotten our daily time frame direction, we've gotten our 4-hour structure. Now we are going to go down to the 15-minute continuation, which is, let's check the 15 minutes time frame if we can spot a continuation on the 15 minutes. If we do, good. If you don't, you move to the next opportunity, which is this. Now clearly you can see that we have a 15-minute continuation here, which is number one, we have our sweep of liquidity, which is here. We have our protected high, which is here. We have our first break of structure, which is this. You can use this as our first break of structure. And then we have our second break of structure, which is this. Use our structural liquidity that retrace 50% to give us the continuation. Okay. Now, the reason why this is not going to be valid is the fact that after price has taken out our structural liquidity, it has already sold up to 50%. Okay, it has already sold up to 50%, and this is it. It has sold from here to this point up to 50%. And now for this setup to be valid now, okay, this has to break this point. Okay, this has to be around somewhere here. This has to be our newly created liquidity, but for it to be valid, you need to break this low here. So for now, this setup is void and we won't be able to take it, because now that the liquidity has been used, there's no more momentum again, and it might come to our POI, dance around and stop us out. So currently we are not interested in this setup at the moment. Okay, so what we'll do now is wait for another continuation. If it breaks like this is what I'm trying to say. I'm expecting this price to come down here, break this point, and then do what you want to do and come to this point and sell. So that this is going to be our newly created liquidity, and then this point is going to be our second break of structure, which is going to be this. So this is what to anticipate price to do, because this is the highest high before the protected high now. So which is going to be our next strip of liquidity. But if price didn't do that and then price come to this zone, we are not going to be entering the setup. Okay, so the next pair on our list we are going to be checking out is V15S. Okay, if you were live here yesterday, I talked about V15S, where V15S was heavily bearish, and we didn't see any continuation. So first of all, let's go to the 24-hour time frame. On the weekly time frame, V15 is bearish. It's on a bearish trend, right? And on the 24-hour, you can't really see anything clearly. So we'll go to the 4-hour time frame and check if there's something on the 4-hour. On the 4 hour time frame, this is the structure we have been trading with since. Okay, clearly you can see there is a sweep of liquidity here. There's a sweep of liquidity here. We have our protected high here, and then we have our first break of structure, which is this. After the first break of structure, we have price retrace 50% to give us our structural liquidity, which is this, and then we have our second break of structure, which is this. From there, we have our point of interest on the 4 hour. So this is the structure we are trading after, and then this is going to be our finish point. This is the starting point is here. This is the starting point. Our price tap into this POI, and then this is the finish point. Okay, so now that we have our 4 hour structure, we'll go to the 15 minutes time frame and look at for our continuation on the 15 minutes. If you didn't see anything on the 15 minutes, we will sit on our hands and look for more continuation. Okay. So what do you have on the 15 minutes time frame? So currently we don't have anything on the 15 minutes time frame. We don't have anything on the 15 minutes time frame except this 5 minutes time frame does something like this, because clearly you can see there is a sweep here. We have a sweep here. We have our protected high here. We have our first break of structure, which is this. We have price retrace 50% to give us our structural liquidity, which is this. This becomes our point of interest. So the only way this setup will be valid is when price does this. When price does this, now we have our second break of structure. Then we anticipate price to come take out this structural liquidity and continue to the opposite direction. So this is what to anticipate on this now. But if it doesn't, then we'll move to the next. We'll be on the lookout. So whatever happened, I'm going to be sharing the setup with every one of you in the community. So if this is your first time of joining my live, all you have to do is check the link in the description of this video and join the Telegram community, because that is where I share most of this synthetic pairs setup, and then I share live analysis, live execution there. So if you're not there yet, you're missing out. And you before the end of this live session, don't forget to like and subscribe to this channel so you don't miss out on any analysis I'll be doing, because every 6 to 7 a.m. we are always live on this channel. So moving on, we don't have anything yet on the 15 minutes time frame. So what we'll do next is that we'll sit on our hands. You can see that this setup is actually clear on the 15 minutes time frame. You can easily see the sweep, structural liquidity. Now we are anticipating a break so that we can be able to execute on it. But if that doesn't happen, we'll be on the lookout. If it happens, I'll update in a group. Now the next pair on our list is V31S, volatility 31S. Okay, so we have volatility 31S. Now what we are going to be doing now is to start our analysis from the daily time frame on this pair. So starting from the daily time frame, you can see that we have this continuation. We have this setup here on the daily time frame. First of all, you can see that we have our sweep of liquidity. Mind you, on the weekly time frame, the trend is bearish, but on the daily time frame, we have a direction on the daily time frame. We have our first sweep here. We have our protected high, which is this. We have our first break of structure, which is this. And then we have price retrace 50% to give us our structural liquidity. Now, this was supposed to be the initial structural liquidity, but why are we not using this our structural liquidity anymore? The reason is because this high was taken out by this, and then it sweep, it give us our second break, it break the low. Okay, now this now becomes our structural liquidity. Okay, as it becomes our structural liquidity, price return back to create to our point of interest and then begin selling to the opposite direction. So now this is what we have. This is our second brick of structure, which is this, and this makes this continuation to be an A plus. This direction to be an A plus direction on a 24-hour time frame. Now, what do we do next is we scale down to the 4-hour time frame and check if we are going to find our continuation on the 4-hour time frame. So on this 4-hour time frame, now yesterday we are looking after something like this. Okay, so and the most important thing for us to always do is that we should always follow the recent point of interest. So clearly, we are only going to be following only clear direction. Okay. Now, one of the most clear direction we can see clearly right now is this one is very, very much clear on the 4-hour time frame. Now, this is what we are going to do. You can easily spot that we have a sweep of liquidity, which is here. This is also a 4-hour time frame. You can spot the sweep of liquidity, which is right here. Okay. After the sweep of liquidity, you can spot your protected high, which is right here. From this protected high, you can spot another first break of structure, which is here. And then you can spot another one, which is here. Your second break of structure, which is here. After price decrease 50% to give you structural liquidity. Now, this is another your structural liquidity, which is used for continuation. Now, this zone becomes your POI. After this one becomes your POI, you go to the 4-hour time, you go to the 15 minutes time frame. Remember, this is your starting points now, where price tap into this point of interest, and then this is going to be your finish point. Okay, this is going to be your finish point. Now, after getting this of starting point and your finish point, you go to the 15 minutes time frame to look out for your continuation setup. Okay, now if you look clearly here, you can see that we have a 15-minute continuation here. But the only way we are not going to be taking this 15-minute continuation is the fact that this POI, it created this setup on the first POI, okay? And from research, the first POI continuation like this doesn't always hold, okay? And most of the time, it's always doesn't hold, okay? So 9 out of 10 times, 10 out of maybe like 2 out of 10 times that it will hold. So the best thing for us to do is that we wait for this price to move somewhere down to be on the safer side, and then give us something like this again. Once it does this, then we have more confidence that oh, this one is going to hold. But for now, we are going to sit on our hands, and then we will be taking that setup. Okay, you are going to be passing that setup. That is why most of the time you need to understand the difference between when you are trading logic and when you are just trading pattern. Okay, so for every pattern people take, there's a logic behind it. The reason why they are taking some, and the reason why they are avoiding some. So this is what we should be anticipating. Hopefully, price does that. But if it doesn't, I think we'll move to the next. Okay. So on the V31s, it's tap into a 4-hour time frame, and then we are going to be anticipating a continuation. Okay. If you give us a continuation, good. If it doesn't, still good. So we have other opportunities. So the next pair on our list today is step 500 index. Let's check for step 500 index if you are going to see something really, really good on step 500 index. Okay. Let's look at the 500 index and see if there's anything on the 500 index. Now, starting from the 500 index on the weekly time frame, the 500 index is bearish and it's yet to take out a target. So the 500 index is bearish on the weekly time frame, and it has already given us a direction there. Now we know where price is coming from and then where price is going to. So what is left for us to do right now is we are going to have our, this is on a 4-hour time frame. Clearly you can see that we have a sweep of liquidity. If you are following me, just pay close attention. I know I understand you should be getting this now. So we have our first sweep of liquidity, which is here, and then we have, after our first sweep of liquidity, which is here, we have our first break of structure, which is this. On the first break of structure, we have our protected high, which is this. Okay, and then we have price retrace 50% to give us our structural liquidity, which is this. And also we have our second break of structure, which is this. After the second break of structure, now this is our point of interest. What do price in our point of interest after taking out the structural liquidity? Price is going to continue to the opposite direction. And as you can see clearly, price is continuing to the opposite direction, which is from here, from point A to point B, which is this is the target. Okay. Now we have our 4 hours. We already know our weekly time frame and 24-hour time frame direction. Now the next thing for us is we've gotten our 4-hour structure. Now after the 4-hour structure, we are going to go to the 15 minutes for our setup continuation. So let's check the 15 minutes time frame. If we find something good on the 15 minutes time frame, hopefully we do, and if it doesn't, good. So we are going to look out for this on the 15 minutes. Now currently there is nothing happening on the 15 minutes unless price does this. We'll be anticipating this. If price does this, then we can wait. If price does this, good. If it doesn't, we'll be on the lookout until it gives us something like that. So sometimes you can actually start spotting a pattern before it even forms, knowing your 4-hour direction and your 4-hour continuation. And if you understand this advanced market structure, the model we trade, you can always anticipate a move before it even forms. So this is what you anticipate on step 500 index. So currently we don't have a setup on step 500 index, but we know where it's going to on the 4-hour time frame and on the weekly time frame. So now let's move to the next pair, which is step 100 index. Okay, let's check step 100 index. Let's see if there's something good on step 100 index. On the 24-hour time frame, step 100 index is on step 100 index is on a bearish move, a heavy bearish move, although it has smashed TP on the weekly time frame. So let's go to the 4-hour time frame because there is nothing on the 24-hour time frame. Let's go to the 4-hour time frame if you are going to find anything useful on the 4-hour time frame. Now on the 4-hour time frame, we have a continuation, which is this sweep of liquidity here. This is a protected high right here. This is our first break of structure. Price retrace 50% to give us our structural liquidity. And then this is our second break of structure, which is this. After the second break of structure, we have our point of interest, which is this. So this price is supposed to tap into this zone and then before selling to the downside, but it doesn't. So we are still anticipating it to come back into this zone and then start giving us our continuation so that we can start taking it. All right. So this is what we're anticipating on the 15 minutes time frame. Once price comes into our 4-hour zone, we start anticipating this on the 15 minutes time frame. And when price does that, Good. We'll start taking our entry. We'll start executing because we don't take trade on the 4 hour, we don't take trade on the daily or weekly time frame. We are doing day trading, so we wouldn't want to hold trade for days, weeks, and all of that. Okay. So now this is what you anticipate on step 100. Moving on, we go to V10S, volatility 10S. Okay. So now what this is what you anticipate on the weekly time frame, volatility 10S is bearish, and on a daily time frame, same thing. On a weekly time frame, volatility 10S is bullish on the weekly time frame, but on the daily time frame, it's giving a little bit of retracement. But let's see what is going to happen. Let's see what is going to happen. So currently, we don't have anything on V10S. Don't have anything on V10S. What I was anticipating yesterday was as price was moving down like this, maybe we will expect a retracement to give us our first break of structure, and then retrace 50% to give us our structural liquidity, and then uh, form something like this. But until then, we'll sit on our hands. We really don't know what the market will do next. If you give us what you are looking for, good. If it doesn't, you are still good. So currently, there's nothing on V10S. The next we are going to go to is V100, volatility 100 index. So on the weekly time frame, it's on a bearish move, but on the daily time frame, you can easily spot our sweep of liquidity. You want to tap into a sell zone on the daily time frame, sweep of liquidity, which is this. Our sweep of liquidity here, we have our protected high, which is this, and then we have our first break of structure, which is this. Let's give us our first break of structure. We have price between 50% to give us our structural liquidity, which is this, and then price break the newly created low, giving us our second break of structure. And after it has given us our second break of structure, this is our point of interest. Remember, this 24-hour time frame now is going. This is the direction it's going to give us. So we now know that once price get into this zone, it's going to sell until you take out this low. Okay. So once price tap into this zone, the next thing for us to anticipate is this same type of structure. This same type of structure on the 4-hour time frame. This same type of structure on the 4-hour time frame. Once price give us that same type of structure on the 4-hour time frame, we are now going to start looking for continuation on the 15 minutes time frame. That is, it's just as simple as that. All right. Now, moving on, there's nothing on V100 index, but this is what you're anticipating for price to do. Tap into this POI, give us a continuation structure on the 4-hour time frame, and then we will scale down to the 15 minutes, 10 minutes, and 5 minutes for our continuation setup. So moving on to the next, we have V75 index. V75 index, which is this. Okay. So now we'll go to the 24-hour time frame. On the weekly time frame, V75 index is bearish. It's on a bearish trend, but it doesn't give us our direction on the weekly, on the daily time frame. So what do? We'll go to the 4-hour time frame because there's nothing on the 24-hour time frame and check if there's something happening there. If you see what you are looking for on the 4-hour time frame, we'll anticipate it. But in case we didn't see it, we'll sit on our hands until something comes up like that, something forms like that, and then we'll gladly take it. All right. Now this is the only thing I can see clearly at the moment. On the 4-hour time frame, we have sweep of liquidity, which is this, and then we have our first break of structure, which is this. About first break of structure, which is this. Now price retrace 50%. It has given us this structural liquidity, which is this. Okay, and then this becomes our protected high, which is this. Remember, this is the 4-hour time frame, and then this is our second break of structure, which is this. This point becomes our POI. Now remember, this is the 4-hour structure. The 4-hour, yes, this is our 4-hour structure. So if price come into this zone, we'll go to the 15 minutes time frame and anticipate the continuation. Hopefully it does that, and then we'll take. So if price tap into this zone, it's going to give us up to 3 to 4 continuation. So if you're always active on the chart, you should be able to catch at least 2 or 3 out of it, and that is how you are going to be making more money. But so on this synthetic live section, whichever trade I see here, I'm going to be sharing it to the community so that each and every one of you can take the trade live with me. Sometimes I will come live whenever we have a live when price is approaching uh, POI. And I just believe one day we'll be here and price will approach POI and we'll all take the trade together. So that's why you need to always turn on your notifications so that you don't miss out on this synthetic live analysis, which happens here daily. So on the V75 index, we don't have anything going on currently. We don't have anything going on currently. So we always anticipate all this move, price to get into the POI and then give us our continuation on the 15 minutes time frame. And voila, we anticipate we execute on the trade. If it goes our way, we'll make money. If it doesn't go our way, we'll learn from it. That is why it's always good to apply proper risk management at all time. So the next pair we are going to be checking is step 300 index. Let's check if there's something on step 300 index. Okay, on step 300 index today, what do we have? First of all, we're starting from the daily time frame because on the weekly time frame, the trend is bearish. So on the daily time frame, what do we have on the daily time frame? You can't really spot anything on the daily time frame. If you look closely, you can't spot anything unless you want to force a setup. So we can't spot anything on the daily time frame. Let's check if the structural liquidity is up to 50%. It's not clearly up to 50%. So we'll wait for a cleaner structure so that we can be able to anticipate on it. So on the step 300 index, we can't really spot anything right now. So even if you spot it, we'll get down to the 4-hour time frame, we can't see spot anything because the trend is bearish. We wouldn't want to start looking for buy continuation. So we'll always wait. Let price come to us and not chasing after the price. Okay, so we can't really spot anything here. And I'll move to the next pair, which is V50 index. Okay, let's see what V50 index has for us today. So starting from the weekly time frame, V50 index is on a heavy bearish move. Okay, it's on a heavy bearish move. And what we'll do here is that if you check on the daily time frame, okay, if you do analysis on the daily time frame, you can easily spot that V50 give us a sweep of liquidity on the weekly time on the daily time frame here. You can easily see a sweep of liquidity on the daily time frame here, which is this. And then it's returned back to break this structure, which the newly created structure to give us our first bit of structure. Then we have our protected high, which is right here. And then price retrace 50% to give us our structural liquidity, which is this. And also price return back to break this second break of to break this newly created low to give us our second break of structure. Now this becomes an A plus setup. And from there, we have our point of interest, which price is going to tap into this point of interest and then continue to the opposite direction. And this is what it's doing exactly. Now, this is going to be our starting point where price tap into this zone to start moving to the opposite direction. And this is going to be our finish point to take out this lowest low here. Remember now, this is on the 24-hour time frame. 24-hour time frame gives us our direction. Okay, just serve as directional bias, and then the 4-hour time frame is going to be where we use as our structure. Now we know the structure, we'll scale down to the 15 minutes time frame. So let's go to the 4-hour time frame and see if we're going to find something on the 4-hour time frame. If you see a continuation in the 4-hour time frame, you can easily scale down to the 15 minutes time frame and execute on it. So currently price just take out a 4-hour time frame structure here and then it has smashed its target. You can see clearly this is a POI, this is a point of interest. You can easily spot this sweep of liquidity here. Sweep of liquidity, you can spot your protected high here. You can spot, now this is structural liquidity. Price take it out and move to the opposite direction. This is our first break, and then this gives us our second break. The whole of this zone becomes our POI here. Price take out the target. You can see price just take out this target. Now what do we do? Let's get down to the 1-hour time frame. If you are going to spot another continuation, if you spot another continuation on the 1-hour time frame, that's going to be what you are going to be anticipating next. So you can see clearly we have a continuation right here, which is this. Which is this. First, we have our sweep of liquidity. Secondly, we have price break the newly created low, giving us our first break of structure. Thirdly, we have price retrace back 50% to give us our structural liquidity to be taken out later. This is our protected high. Then this zone becomes our point of interest. So we're anticipating this price to do something like this. It can tank down a little bit and then move something like this and come to this zone. So once you come to this zone, you start looking on the 15 minutes time frame or the 10 minutes time frame. Let's check if this retracement is up to 50%. We use our Fibonacci retracement. So I'm going to start it from here and check if it's up to 50%. Yes, it's up to 50%. You can clearly see it. The zone where it is right now is up to 50%. Okay. So the only reason why you are not going to be considering this is if I use this Fibonacci retracement to this point, to this low where it created the second break of structure, and this line is now up to 50%, then we'll not be considering it. But now it's up to 50%, which means this is what we are going to be anticipating on V51s. Okay, we are going to be anticipating this on V50. No, not V51s. This is volatility 50 index. So we are going to be anticipating this move. Hopefully it does that, and then I'll follow you guys up in the Telegram community. So this is what you're anticipating right now. So you can mark this down, put it on your watch list, and also anticipate it in case price come to the POI later. The next we are going to be checking out is V100 index. V101 index. V101 index is bullish on the weekly time frame and it's yet to smash its target. And on a daily time frame, nothing is happening currently. So we'll scale to the 4-hour time frame and check if there's something happening on the 4-hour time frame. So on the 4-hour time frame, nothing is really happening too. On the 4-hour time frame, you can only have a structure. I've showed this to more than 3 times. This is a structure that I just played out. Okay. This is a structure that I just played out. So this is going to be your assignment. If you can see this, mark it and then you send it to me on Telegram. Let me check if you have been following what I've been teaching. Now, this is what you're anticipating next on this V100s on the 4-hour time frame. Anticipating price to do something like this. Once it does this, we have our first break of structure, which is going to be this. And then this is going to be our protected low. It's going to be our protected low, and then this is going to be our next structural liquidity. If only we see something like this. So this place is going to become our second break of structure. Then we anticipate price to come into this zone, give us our 15-minute continuation. Then we can start taking more continuation. But this is going to take some days, but we have to be patient and wait. If it does that, fine. If it doesn't, we'll still anticipate more move on V100 index before it smashes overall target on the weekly time frame. So the next on our list we are going to check out is V25 index. So the V25 index, we are anticipating two move at the moment. Yes, we are anticipating two move at the moment because on the daily time frame it's bearish, on the daily time frame is bullish, and on the daily time frame too is bullish. On the 4-hour time frame, we are going to be looking at for our continuation structure on the 4-hour time frame. So clearly you can see that we have something like this. We have our first break of structure, our first sweep of liquidity, which is this. Price retrace back to break the newly created high, giving us our second break of structure, which is this. Price retrace 50% into this zone again to give us our structural liquidity, which is this. And then price move retrace back, break the newly created high, giving us our second break of structure, which is this. Now this is considered as an A plus continuation. And so this becomes our POI. So when the space price to come into this zone, give us our continuation on the 10 minutes, 15 minutes, and then we'll be able to execute on the trade. And if you look closely again, on the 1-hour time frame, price is still doing the same thing. So whichever one price tap into the POI and start respecting it, that is the one we are going to start following. All right. So now we can see there's a sweep of liquidity here. Price give us our first break of structure, which is here. And then we have price retrace 50% to give us our structural liquidity, which is here. And then this is our second break of structure. This becomes our second break of structure. And this point is our protected low. This zone is our protected low. Okay. Now this whole of this places becomes our point of interest. So price is going to come back to this zone, start giving us series of 15-minute continuation or 10-minute continuation, and then we'll start taking it. Okay, so we have this and we have this. So whichever one price come to first, that's the one. Whichever one price come to first, start respecting, that's the one we'll start taking. Okay, now you can see clearly that there's nothing on the V15, V25 analysis at the moment. So we're only anticipating the 4-hour structure. So the next pair we are going to be checking out is step 200 index. Step 200 index. Okay, on a daily time frame, on the weekly time frame is on the bearish move, which it just smashed its target on the weekly time frame. Okay, it was bearish on the weekly time frame, it just smashed its targets. And then on the 4-hour time frame, let's anticipate another move. Let's check if there's any move you are going to be anticipating, a continuation that we are going to be anticipating. So this was the one we were anticipating yesterday, but price is not doing justice to that. Now that this is too long, let's see if it's going to be a 24-hour continuation that we should be start anticipating as 24-hour. Now we have two 24-hour continuation, two 24 hours direction we are going to be anticipating. So first of all, we have this sweep of liquidity, protected high, first break of structure, price retrace 50% to give us our structural liquidity, and then we have our point of interest. So what is going to happen next is that price is going to move into this zone. Price is going to move into this zone, give us our 4-hour structure, and then we'll start looking for continuation on the 15-minute time frame. So definitely we are anticipating that for price to do that. Okay, and if price doesn't respect this, if price doesn't respect this one, we'll anticipate the next one, which is this. Here's another continuation. Here's another direction that price is going to come into, this 24-hour continuation here, this 24-hour structure here. So price is going to definitely come into this zone too, if it doesn't respect the first one. All right, if it doesn't respect the first one, it's going to come here, and then we'll anticipate the 4-hour continuation or 1-hour continuation, then we'll ride along with it. So if price doesn't come here, price will come to this other one, price will come to this one. So that is what you are going to be looking at for. But if price doesn't respect this one, if price come here and do something like this, we anticipate the move from this zone, from this zone. Anticipate to move from the 4 hour, 24-hour zone, which is going to be this point. This point is that, yes, this zone. So anticipate to move from this zone. Once price comes to this zone, give us a 4 hour continuation, a structure, and then we'll start taking our continuation on the 15 minutes. So currently we don't have anything on step 200. So the next is going to be step 400. What do we have on step 400? Currently, step 400, let's check from the weekly time frame and the daily time frame. If you go to your MT5 and check step 400 is bearish on the weekly time frame, and on the daily time frame, step 400 is also bearish on the daily time frame. And on the 4 hour time frame, let's check if we see a structure on the 4 hour time frame. We anticipated this a few days back, but price didn't respect it. So this is the reason why we don't take entry on the higher time frame until price give us a good continuation that, okay, yes, I'm going to start moving from here, so that you don't lose all your capital to higher time frame structure. That's why we always wait for the continuation on the 15 minutes, so that it's only going to give us direction, structure, and then a continuation. Right? We follow direction, we follow structure, and then we follow continuation. So that is the best way to approach uh, to do top down. That's the important reason why you need to do top down analysis, because it's going to really guide you where you are coming from and where the price is going to. So if you enter this trade with $1,000, you would have been out by now because it already got invalidated, and there's no possible reason that this price is going to go to this opposite direction again. So had it been you wait for price to tap into your higher time frame zone, then give you a intermediate continuation, we can only, which is like the 1 hour or the 4 hour time frame structure, then you can have a continuation. That is why you need to follow directional bias first, structure, and then your continuation. So currently this has been invalidated. So the next thing we are going to look out for is if price give us another continuation on the 4 hour time frame, give us the structure on the 4 hour time frame, then we anticipate a continuation on the 15 minutes time frame. So basically what we do is we trade most of continuation, and that is what has been helping us. So the next we are going to be checking is V50X volatility 51 index. So we go to the 24-hour time frame. On the weekly time frame, V51S just smashed TP on the weekly time frame. All right. So on the 24-hour time frame, currently nothing is happening. You can't find the structure on the 24-hour time frame. So let's go to the 4 hour time frame and check if there's anything on the 4 hour time frame. On the 4 hour time frame, nothing is really happening on the 4 hour time frame. So let's check the 1 hour time frame if we see something on the 1 hour time frame. On the 1 hour time frame, I mark out this setup here today, which is this. First of all, we have our sweep of liquidity. All right, we have first break of structure, which is this, and then we have price retrace 50% to give us our structural liquidity, which is this, and we have our protected low, and then we have our point of interest. Okay, then this is our second break of structure. This is supposed to be a very good buy. Okay, we are supposed to start looking for continuation on the 15 minutes time frame. But one of the problem here is that price has taken out this protected low. It got it invalidated. And the problem right now is price might start buying to the opposite direction and smash the target. And price might give you a continuation on the 15 minutes time frame and then stop you out. So one of those two things can actually happen. Okay. So this had it been this protected low, it has a wick up to this downside a bit, a bit like this, and then our protected low is somewhere here. And we didn't see that this week take it out, then this is going to be a very strong move. But now it has been invalidated, so we are not going to be interested in it anymore. So this, if this week would have come down a little bit, bearish, this bullish candle wick would have come by a little bit, we would have anticipated a move. But now that it doesn't, and it's somewhere here, and you see that this has been invalidated, we will skip this setup. So this is no longer valid anymore. So we'll move on to the next pair until price give us something good that meets our criteria. That is when we are going to start anticipating. Okay. Majority of the time, price will weak it out and then go to your direction. But to be on the safer side, you just have to let it go and then you wait for a better opportunity. So the last pair we are going to be checking out is V25 index, and check what is happening on V25 index. So on a weekly time frame, V25 index is bearish. It's heavily bearish. And on the 24-hour time frame, nothing is really happening on the 24-hour, but we already have a weekly time frame direction. Okay. Now we'll scale down to the 4-hour time frame since there's nothing on the 24-hour. Once we already have a continuation, once we already have our direction on the weekly time frame, if the 24-hour time frame doesn't give us anything, we still know the same direction because weekly time frame has already given us the direction. So we can just from weekly time frame or 24-hour time frame directly to the 4-hour time frame. So on the 4-hour time frame, we have our sweep of liquidity here, which is this. We have our protected high, and then we have our first sweep of liquidity, which is this. And we have price retrace 50% to give us our structural liquidity, which is this. And then we have our second break of structure, which is this. And this zone becomes our point of interest. This is our point of interest. And now price will start giving us our 15-minute continuation until it takes us this target. This is the target. Until it takes us this target. So this currently is the target. All right. Now once price takes out this target, we'll now start looking for another 4-hour structure. So for now, we will start anticipating 15-minute continuation, 15-minute continuation until the downside. So let's check 15 minutes if you are going to find any continuation on the 15 minutes. Currently, there is nothing happening on the 15 minutes. There is no continuation on the 15 minutes at the moment. So we are going to sit on our hands. So for the whole of today, all the 14 pairs we've checked out so far, we haven't seen a continuation, and that is fine because we are looking for quality and not quantity. We don't want to risk our capital unnecessarily. We don't want to take unnecessary losses. So this is what we have for today. Currently, there's nothing happening on all the pairs. We've checked from V25 1S, V75 1S, V90 1S, V15, V30, V5, step 500, step 100, V10S, V100, V75, step 300, V50, V100 1S, step 200, step 400, V50S, and then V25. But we haven't found anything yet on those pairs. But if something comes up, I will make sure I update in the community so that we can all follow along. So if you are new to trading synthetic indices and you want to sign up using the same broker I use, that's fast withdrawal, fast payout, and very, very reliable. It doesn't stress anybody. You can use the link on my description of this video to sign up on Deriv broker, fund your account, and then you can start taking the same trades live on this channel. And I'll always update everything going on this about this synthetic indices pairs in the community, so you don't mix up. So if you're just joining for the first time, before you leave, make sure you like this video, share to your status, your friends, and don't forget to subscribe before you leave today. Okay, and make sure you have a beautiful day today and stay safe out there. I will see you guys tomorrow, same time, 6 to 7 a.m. Bye.